Hello everyone, I hope all of you guys are doing well. Therefore, in our previous lesson, we have already talked about Forex, the currency pairs, lot size and the pips. So today we are moving to another very important topic, which is the Forex trading session. The Forex trading session. Now, before we start to talk about the session themselves, I want you to understand something simple. Forex is a global market. There isn't one single place where all Forex trading happens. Different financial centers around the world become active at different times of the day. And that's why we divided Forex markets into different trading sessions. The three major sessions we are going to focus on are the Asian session, the London session, and the New York session. Let's start with the Asian session. When we talk about the Asian session, we are mainly talking about the financial centers in the Asian region, especially the Tokyo, along with the other markets such as the Sydney. Now let's come back to Tokyo. Tokyo is one of the major financial centers in Asia. So when that part of the world becomes active, we call it the Asian session. Now, what normally happens during the Asian session compared with London and the New York session? The market can be relatively quieter, very quiet. Price moves slowly and can spend a lot of time within a range. For example, imagine Euro USD is trading at around 1.1 thousand. During the Asian session, price moved from 1.1980 up to 1.1010, then come back down and continues moving between those levels. So now we have an ASEAN high around 1.1010 and ASEAN low around 1.980. The range becomes something we can pay attention to when the next major session opens. Now let's move to London session. London session is one of the biggest financial centers in the world, and a huge amount of Forex activities happen around the London session. This is why you will often notice that when London becomes active, the market becomes much more volatile. Let's use our previous example. Imagine Asian session created a high at 1.1010 and a low at 1.1980. London opens and suddenly Euro pushes above 1.1010. A beginner might immediately see price broke the high, so I should buy, but we don't automatically do that. We watch what happened next. Maybe price goes above 1.1010, takes the liquidity around the high, and then quickly come back below it. That is a completely different situation from the genuine breakouts where price breaks the level and moving higher. So London is important because increased volatility can produce stronger moves and sometimes liquidity sweeps around levels created. Let's come back to New York. New York represents the major financial center in the United States. When New York becomes active, the market becomes active again, especially because for the period of London plus New York are both open. This is called the London-New York overlap. And because of two major financial centers are active at the same time, we can often see increased volatility. Let's continue our example. For example, London push Euro above the Asian high at 1.1010 and then reverses downward. When the New York becomes active, it could continue the downward move, or New York could come and completely reverse the move. The important thing is that we don't assume what New York must do. We observe the market, wait for the confirmation. Now I want you to understand something very important. When we say Asian session, London session and New York session, we are not saying that one particular bank controls the market during that session. This session simply represents period where different major financial centers and market participants around the world are active. And because of the amount of participation changes throughout the day, the behavior and the volatility of the market can change as well. So let's make this very simple. Think about the market like a continuational race. I can even say the relay race. The London comes with much stronger participation and can create a major move. Then the New York becomes active and can either continue that move or change the direction. Again, this is not a fixed rule. You don't have to behave this way every single day, but understanding this gives you a better way to read what's going to happen on your chart. So whenever you open your chart, don't just look at the candles. Ask yourself, which session are we in? Secondly, which market financial center is currently active now? Third, what did the previous session do? Where is the previous session high and low are? These are some of the important questions you need to ask yourself whenever you open the chart. And what is the price doing around those levels? Once you understand that, you are ready for the next concept, because now you can start talking about the price, what the price can do, the accumulation, which we call accumulate sometimes, the accumulation, the manipulation, and the distribution, which normally targeted the liquidities.